Here's the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So as we can see here, NVIDIA is moving higher on the day today. There are several reasons why this is important at the moment. And in this video, we will be looking at some important price levels, some important support and resistance zones, so that hopefully traders can identify some profitable trading strategies for this stock going forward. So as I said, share prices are starting to move higher. What we're looking at here is the 4-hour time frame. Each candle on this time frame represents a 4-hour trading period. And as we can see here, this new share price activity has been quite forceful in nature. So this new high that has been posted during today's trading session comes in at 121.61. So this is important mostly because what we have now done here is to break above this 120.79 prior resistance zone that was giving the stock a large amount of trouble here previously. We had seen several instances where we were actually even starting to see some lower highs that were developing. I'll show an example here. And then there was also a series of lower lows that was starting to develop on the shorter term time frames. That would be these two areas here. And the possibility here was that we were starting to, we were in the early phases of a downtrend channel that could start to extend and send share prices lower. Now, from a short-term perspective, that might not seem like a major problem. Only falling to 113.24. Maybe that's even a healthy downward pullback price decline. Maybe it doesn't seem like there's much wrong with that, but a major failure at 120.79, what that was really starting to do was to create a massive head and shoulders pattern on this price time frame here. So, previously we were seeing a left shoulder come in at 120.16, a potential head for the pattern coming in at 131.26, and then a potential right shoulder for the pattern coming in at 120.79. So this is a very ominous pattern because the size of this pattern is huge. I mean, it's a very large sized head and shoulders pattern, kind of a monster, sea monster. What is that thing called? A kraken? I don't know, like a very large monster. This was a very concerning looking price pattern. We hadn't yet confirmed the pattern, but it was starting to develop. It was in the early phases of developing here. But with this most recent price movement, what we can see is that this right shoulder has now been broken. So this is actually a higher resistance zone that has now been created. And this is a very strong bullish candle here. One that is also being supported by increases in trading volumes as well. We also need to make sure to point that out. So as we can see here, the trading volumes for this time period are also rising quite sharply, and then definitely engulfing the bearish trading volumes that were preceding this formation. So overall, we can lend some confidence to this most recent price movement. As long as we don't see any drastic movements lower, then we would have to call this a false breakout. But, as things currently look here, this does appear to be a positive development. And I would say as long as we don't fall back below roughly the support zone here, which comes in right around 115.30, as long as we can hold above that level, that would mean that we are able to maintain share price activity above the exponential moving average cluster. And then we should be able to maintain a strong foothold here in a bullish manner going forward. So this is actually a fairly significant break. It might not seem like a major difference here. The difference between 120.79 and 121.61 might not seem like a massive difference. But what this really does is that it starts to invalidate this massive head and shoulders pattern that was starting to develop. And this was very concerning for many different reasons. Even just from a technical perspective here, the ultimate price target would have been in the low 70s if this pattern did complete itself. We didn't quite get there, but it was something that we had to be watching because it was something that could be developing potentially. So in some sense, this is good news. I mean, if you're bullish on the stock, it's definitely good news. If you have a long position, it's definitely good news. But even if you're just looking at the price patterns themselves, the chart patterns themselves, this was really going to put us into very precarious territory here, where we were going to have to project much lower prices if this price pattern did actually unfold and complete itself. So overall, this is a very encouraging price move because we're no longer going to have to worry about that prior head and shoulders pattern. So as I said, currently we are dealing with this support zone that comes in at 115.30 roughly. If we see a break below there, then it's possible you could start to say that this 121.61 level, it could be a false breakout, but we're not there yet, so we won't start to make that assessment just yet. Currently, if we look at the indicator reading here, we can see that overall, the share price movement has still been governed and controlled by this downtrend in momentum, as shown by the relative strength index here. We can see that this downtrend line has now been clearly tested on 3 separate occasions, and the slope here is a very stable downtrend slope. So, this is a very strong downtrend here in share price momentum. And as I said, this is the 4-hour time frame, so this is not a short-term time frame. The way to get out of this negative condition here will be for the relative strength index to move above this declining trend line here. That will signal an end to this longer term, or at least intermediate term, negative bearish share price momentum. And that would then allow share prices to possibly at least retest that 131 resistance level, and then possibly even break above that zone from there. So, there are some interesting developments here, and what we're seeing here overall on the day is a sort of a disconnect between NVIDIA and some of the other popular technology stocks. For example, Palantir. I just finished a video on Palantir, and I recommend that people take a look at that video because that stock is really starting to roll over now. After posting some very significant long-term highs. That stock was recently included in the S&P 500, so there's been a lot of optimism. A lot of attention has been placed on Palantir over the last couple of weeks, but a lot of that rallying activity was kind of unfounded from a fundamental perspective. It was really just based on this S&P 500 news, and that type of event tends to reverse itself quite sharply. And that is what we're seeing today in Palantir. So there is a disconnect here because what we're seeing in NVIDIA is not the same thing. We are seeing a rally here. And in my view, this is actually a fairly significant rally because this prior resistance zone at 120.79 was incredibly important, and it could have signaled much bigger danger for the stock if that level had not broken. So here's the current stock market update for NVIDIA Corporation, stock ticker NVDA. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.